Good morning, guys, and welcome to the Camp Financial Stock Market Update. So, before we dive into the stocks and how they ended last week, I want to go over um, a little bit about the what's being touted as the super freaking strong U.S. dollar. The U.S. dollar has been on a major push. It's gained a lot of value against pretty much every currency across the world, and dig into why that's happened and what that really means. So, in my opinion, the biggest reason that you've seen the U.S. dollar take off is basically strictly due to the fact that we're the only company that's raising interest rates. So, with us raising interest rates, people across the world are looking for yield, and with the U.S. rates increasing, they're looking to come to the U.S. to get yield. What does that mean? So if they're looking to come to the U.S., that means they're selling their currency and buying the U.S. dollar. So the U.S. dollar has gained extreme amounts of value against foreign currencies this year. And so what does that mean, right? So the U.S. dollar has gained value. What does that mean for everybody? Well, it means that if you're going to travel overseas, now's the time to do it. If you're going to Europe, you're going to Britain, right now the exchange rates are as favorable for U.S. travelers, U.S. consumers, U.S. businesses that are buying things overseas. All of those things are going to benefit from the strong dollar. Who doesn't benefit? The U.S. companies that are do a lot of sales worldwide. They're not going to benefit as much because they still go sell in whatever the local currency is, and then they have to convert that money back to the U.S. to bring it back into the U.S. Where you may see some benefit, and this is all speculation because we don't know what's going to happen with Trump's tax plan that he wants to put in place. How likely is he to make that happen? Who knows? But if tax reform would go through, then you would see that it's going to benefit the larger companies too that have a lot of money offshore. Somebody like Apple could bring their money back at a lower tax rate, which is going to increase the value of the U.S. dollar even further as billions and billions of dollars look to come back to the United States. So it's kind of a more of a monetary side, but just to give you a feel for what's going on with that. Let's jump into the stocks here real quick, and when we're finishing today, I'm going to mention a stock that I'll be buying. Actually, I'll buy it this morning shortly after the open, just to give you guys some idea. So and that'll be in my quantitative and fundamental and technical. It's the big system that I've been using for the longest amount of time. So alright, let's take a look at what happened Friday. Application software struggled, and that's where I'm going to be buying. So Oracle was down 4.3%. That's not who I'm going to be buying, but it is in that sector, and that sector was pretty much all red. Telecom, communication equipments were down. Hewlett Packard and the Diversified Computer Systems down. EA Sports, Blizzard, Activision both down. Google and Facebook down. looks like there is a green in here, and I'm not sure who that is, but mostly red there. The one green in the tech sector is telecom service, domestic telecom service, AT&T, Verizon. I'm not sure which, CenturyLink and Frontier. Frontier was the best on Friday. Property and casualty insurers were flat to a little bit up. A lot of green back in the REIT system, in the residential real estate investment trust. A lot of green in the healthcare. A lot of green in the industrial one, and more flat in the retail real estate investment trust sector. Those are all pretty much all companies that are going to pay a big yield. It's part of their it's a requirement in their bylaws that they pay out a certain amount to shareholders. So if you're looking for yield, and that might be what was going on Friday, that's where one of the first places people will look to go. Let's see, we got some green in the consumer goods, cigarette manufacturers, major food manufacturers, Kraft Heinz, Archer Daniels, Midland, the farm products. Some green to flat in the beverages, soft drink sector. Interesting in the apparel stores, you got Ross Stores up 3.5% versus Limited down 3%. Nordstrom down 8.7%, Gap down 6.5%. So some definite differentiation within that sector. They definitely did not all trade in lockstep on Friday. In the restaurant, you got Chipotle up 2.5%, $392. It's interesting stock. It's one that's perplexed me many times. I've thought about buying and have never pulled the trigger on it. But basic materials in the independent oil and gas got a lot of green, a couple reds in there for sure, but mostly green to flat. Pipeline companies did real well on Friday. Williams Company up 5.8%. The biotechs, again, another one that's a pretty good mix. There's some green, some red, and some basically flat. Healthcare plan stocks did real well. They were basically all green Friday. Major drug manufacturers, Eli Lilly, bounced back a little bit from their sell-off that they've had. The utility sector again did real well. Again, another place where people look to get into yield. That's the electric utilities, I should say, that performed well. And then a good mix again over in the industrial goods, diversified machinery sector, where you've got GE was up 1.5%, but you had some other, like Cummins was down 2.5%, and then a good mix there in between. So before we shut her down today, like I said, I am going to mention I will be buying today, shortly after the open, as long as as soon as I think about it after 9:30. I'm going to go in and buy stock symbol MGIC. It sold off about 3.5% on Friday. Again, that's in that application software. I am slightly concerned about the fact that it just dropped below its 200. It closed below its 200-day moving average for the first time since February of this year. So that does concern me a little bit, but looking at the company, in comparison to the other application software companies out there, they've got almost no debt. They pay a nice, healthy dividend. There's definitely some upside potential within the stock. Let me go back, take a look. I seen they had targets on it were around $8.5, which it actually was. I think it was almost there. It was almost $8. The target price is $8.5. It made it up to almost $8 back in late August, and then it's sold off, and then it's just kind of bounced around. But again, almost no debt, 2.5% dividend. So it's one I'm going to take a shot on, and we'll see how it goes. So we'll add that to the spreadsheet, and we'll continue to talk about that here on the show. So if you have any specific stocks you'd like to ask about, any questions, feel free to send me an email, chrism@campfinancial.net, and I will either respond to you directly or here on the show. So that's it for today, guys. Take care, and we will see you next time.